Well, America is in a long, painful delevering process, dubbed a bumpy journey to a new normal by PIMCO CEO Mohamed El-Erian. He joins us now to talk about the details. Thank you for being here. Appreciate it.
Thank you.
If we look past this debt ceiling debate and deal, what would you say are the biggest headwinds facing the U.S. economy right now?
First, we need to overcome a badly functioning housing market. And housing is critical. It's the biggest asset that people have. It determines how mobile people are. So can you leave your job and can you move for another job? So housing is the first issue. And right now the housing market isn't functioning properly. Second, bank lending isn't functioning properly. It's very concentrated. In fact, banks are lending to people who don't need money, and those who do need money find it very hard. Thirdly, we have to overcome this public finance issue. We have to convince people that we have a medium-term solution for a medium-term problem. And then fourthly, we have to overcome all sorts of infrastructural constraints that stop us from being productive as a nation. So far, unfortunately, we've seen absolutely no package in place that deals with these issues in a holistic and coordinated fashion.
How do investors, families, businesses insulate themselves from the adverse effects of what you think is going to be very long-term here?
We are looking at an outlook of sluggish growth, call it 2%, for a number of years, which means that the unemployment rate will remain stubbornly high and will become more structural in nature. Second, because of the actions taken by the Federal Reserve so far, including the unconventional policies, we have borrowed as a society investment returns from the future, which means that our expectation about investment returns should reflect that. Thirdly, there are major realignments going on, not only within the U.S. economy, but within the global economy. Just think of what's going on in Europe. Fourthly, let's not forget there's one part of the world that's doing great, and those are the emerging economies that so far have not only delivered success, but have been able to manage their success. And therefore, we, all of us, have to be more global in our thinking. In fact, that is why U.S. multinationals are doing so well. They've understood where the markets are and have gone there. And I think all of us have to understand that this is a major realignment of the global economy.
This would have sounded crazy a year ago, and you may say it still does, but looking for a safe haven at this point in time is very difficult if you look at traditional safe havens, whether it is U.S. treasuries, even gold, whether it was the U.S. dollar. Would it be fair to say that a safe haven at this point is more investing in emerging economies than it is investing in U.S. treasuries?
As absurd as that would have sounded, and as absurd as it may sound today, that is certainly a view we have at PIMCO. But I would qualify it. You have to mix and match safe havens. So don't rely on just one safe haven. The way we think of it is the following. Think of this can. In the old days, investors could just rely on what was written on the can. And the can said U.S. Treasuries, and therefore we all assumed if it's U.S. Treasuries, it's a safe haven. Today, we have to go inside the can and ask what's in the can. And the key thing about a safe haven is a clean balance sheet. And the U.S. right now does not have the cleanest of balance sheet. So as an investor, you have to mix and match various safe havens, go global. So not only U.S. Treasuries, but look at other places that have better balance sheets. And there are many. It's Norway, it's Germany, it's Brazil, it's China, it's Mexico, believe it or not.
So what does the administration do at this point in time to try to steer the ship in a direction where the United States, again, is a safe haven?
So I worried about this a lot because I have an 8-year-old daughter, and I worry about her future and the future of many people. And I look at the unemployment numbers and I get depressed. So in the middle of the night, I woke up and tried to do exactly what you do, which was, what do we do after this debt ceiling? And it ended up as an op-ed in the Washington Post, and it had a very simple message. Washington, D.C., please pivot. Pivot from a debate on the budget to a debate on what we need to promote growth and jobs. And pivot quickly. Because what has happened is the whole debate on public finances went from being a means to an end to being an end in itself. And we forgot why it is we want to sort out our medium-term finances. And the reason why we want to do so is to promote growth.